at right now. Rohan Mehta is with us. He's CEO and Portfolio Manager at Turtle Wealth. Rohan, good afternoon. Thank you for joining us, and season's greetings to you. Happy Diwali. Prashant this side. I think first time that we're speaking on the air. Tell us a little bit about Turtle Wealth and what you do, and because I have the fact sheet, but would love to listen from you. Because what I understand is you look at investing in turnaround businesses, but with a quant mindset. So just the process, if you can explain. Go on.
Yeah, hi Prashant. All the viewers, happy Diwali and New Year, and thank you for having me in the show. So 15 years, 17 years, we have made some processes where we have seen a great research that how we can make, a long-term wealth and what are the credentials of picking up the stocks which can create an exceptional wealth creation point. And that's where our 16 to 17 years, we have invested in a lot into the quant making process that how to pick up the companies. And in that, we have found that the best wealth creation happens into turnaround businesses, but turnaround businesses picked up not by emotion or by just intuition, but rather than purely on the data making process. And that's where we have created a specific quant into three areas of businesses where is the selection, allocation, and reviewing of a stock. Because generally we talk a lot on allocation or rather selection of a stock, but very less on allocation of a stock and nearly about nothing on how to review a stock once it is allocated. So that's where our, the fund works onto the process. We feel much ahead of a time, but I think so that's where the world is going onto quant-driven process rather than emotional-driven process.
Sure. If you can be a little more specific, say for example, the reason I'm asking is if there's a turnaround stock, usually you'd want, which means you'd buy in early, right? Something is down 30-40%. And things are changing. I mean, that is, or if you by turnaround, you mean something else. But that's typically what our viewers would understand with turnaround. But when you apply quant to it, which is, mathematical things like, well, outperformance to a certain index, I mean, those things won't show because, it's at a trough. The stock's not running away. It's not, no one believes it. So how does the two square? Go on.
Yeah. So turnaround doesn't mean, buying up a stock at 20-30% downside, rather than it's the different way around what we have picked up. To buy companies which has not done anything great from last decade, but at the same time the stock PAT has been rising from last 10-15 years. And we pick up the stocks only once the stock crosses all-time high. And that's where the whole quant changes the game. And if you've seen in last 30 years, the best wealth creation stock is when the company has not performed or a sector has not performed for a longer period of time. But at the same time, the revenues have come up higher, but the pricing have not been discounted. And there can be a re-rating in that sector. And that's where I can give you an example in 2022, could be an auto or a PSU in 2021, or maybe in 16 chemical story. These are the sectors where 15-20 years nothing had happened. And the first indication of a stock to do turn around is when it does an all-time high after a longer period of time. And second indication is that when the company is making a consistent all-time high profits. And the third indication is that when the company does an outperformance to its index, because that's where we buy stocks, right? We want an outperformance to index. We don't want an underperformance to index. So there are a lot of credentials to this for sure. But if you look forward for what are the top three credentials, defining all the 500 credentials, what we have done into a research, we have found that these are the three key credentials to find out a turnaround story. I can name a lot of companies into the point, but rather I can put it on the sector. And the sector comes down a very interesting sector that would be auto in last 2 to 3 years.
Hi, Rohan. Good afternoon. Good to see you in. Nigel on this side. Good to have you on the show. Very simple one. From this Diwali to next one. What's the big bet you're taking? You can mention 1, 2, or 3 stocks. Our viewers will love it.
Yeah, first of all, being a quant, we don't take bets, we see the data. So I'll tell you something which is very different onto the show is we are taking a very big bet on silver. ETFs are not on the MCX side on the silver, but look at where the wealth has been, the value has been there into silver, and specifically in the quant side also, silver looks very well. Where our portfolio, we have 10% of the silver ETF. Also in the same side, we have created something, we are looking forward for companies which are pure into the consumer durable side, companies like Gillette. A company in the agro-organic side, Ami Organics looks very interesting. So if you're talking for three things, I think so very different. It's silver, Gillette and Ami Organics makes a lot of wealth into and looks forward for a good 1 year wealth creation story.
Lovely. On silver, let's take that point first out of the way. A lot of people are looking at gold, and gold has, seen a good run in the last 1 year or so. But now people are getting incrementally more bullish on silver. They're saying that ratio between silver as well as gold, well, that will narrow. So that means silver will catch up and outperform. Any targets you have on silver?
Generally, as a quant point, we don't have targets, but seeing that the value, we feel that in next 3 years, we should at least expect more than double of the silver. I would be not surprised if we can do it in next month also. But yeah, being fair into it, 3 years down the line, we can expect double of the silver. And also, we are taking a very best hedge to equities also, right? So if you see this month, Nifty 500 is somewhere around 7% down, and silver is somewhere around 8.5% plus. And that's where the hedging comes into the portfolio. Gold has done exceptionally well. There's no doubt about it. But silver would create for sure a larger value than gold in next 2 to 3 years.
The call on Gillette is going to be very interesting, and I'll track that closely, Rohan, because I remember Gillette in 2019, the stock was 8,000 rupees. And for the next 5 years, it did nothing. In fact, it eroded wealth. Yes. And in the recent past, I think the last 6 months or so, Gillette has seen a big rally. But if you look at it from that 8,000 rupee mark that it saw in 2019,
nothing.
Well, it's up only around 20%. Yeah, Rohan, you want to comment?
Yeah, so Gillette is a very interesting business. See, we all shave, and that's a man grooming brand. We talked with management with Gillette, and then we found the turnaround story, and they completely missed the man grooming industry, right? And that was being taken all by the startups. And look at what the back of the brands they have, and they are coming very aggressively into the man grooming industry with the toothbrushes and the shavings and the trimmers and the other man grooming industry. It looks superb, and see the numbers. 6 years, nothing has happened. At the same time, the profitability has gone at least 3x into the stock. And I don't have to talk more about the company. We are having the best management and best brand. And what a monopoly! You don't keep beard, so I can tell you that I can tell you without any doubt, the only shaver you will have or the blade you will have is Gillette. There's no other alternative. It's Tina. There is no other alternative.
I mean,
Prashant's thinking about Tina.
I said this earlier also, long back, right? Warren Buffett, 20, 30 years back, he was asked why he invested in Gillette. It was one of his talks. He said, I'm paraphrasing, I don't exactly remember, he said, men have one face, women have two legs. so there you go. That's, But anyway, it's great speaking with you. Appreciate you joining us, and wonderful chat. Have a good Diwali, and season's greetings to you as always. Thank you.
Thanks.
But I think we're going to take a quick commercial.